compressed, but the double-digit revenue growth continues. Tell us, what's been the contribution from volumes?
Good morning. Good morning. The volume contribution and the value contribution is almost same. So we have grown by almost 18.9%. The margin contraction has come because of abnormal increase in raw material prices. If you see last quarter, government has increased duty on edible oil from 10% to almost 55%. And due to bad potato crop, the potato price is almost double of the last year prices. But the value and volume growth is almost same in our case.
Are you expecting this kind of volume expansion to continue? Like, what is the expectation on volume growth for the next couple of quarters?
We always say that we are looking for 18 to 20% growth in volume and value both. That's the target, 18 to 20% growth.
Okay. Would that be the order for the upcoming festive season as well? Because one would imagine that there would be higher purchase during that period.
We'll try to go more, but the target is 18 to 20%.
You just talked about potato prices. Aside of that, the other raw materials as well, like edible oil, have also been on an inflationary trend. And now, thanks to higher crude, even packaging costs, we understand, have gone up. Have these been responsible for the margin compression? And if you could highlight, what has been the average rise in cost that you witnessed in the first quarter?
If you see edible oil, the edible oil price used to be around 50 to 55 rupees per kg. That has increased to almost 75 rupees because of increase in duty by the government. The government has increased the duty from 10% to 55%, which has almost increased the price by rupees 20 per kg. There has been pressure on potato because last year crop was not that good. The average potato price used to be around 12 rupees, which is currently at 20 rupees. So if you see the negative impact of these two commodities, it is more than almost 6%. But due to some changes what we did in our channel margin, in the packaging, in transportation, in corrugated boxes sizing, we could basically take few negative out of it.
Yeah, that indeed is the case.
I see softening of raw material prices in the next 2-3 quarters.
And so what will be your sure? So what will be your range in margins then? If I mean, how are you looking to protect margins?
So we reduce the grammages a little bit. We have changed the packaging size. We are trying to focus more on the product which gives more value, on the premiumization a little bit. Putting all this put together, we hope to have margin of 7.5 to 8% this year, which is currently around 6.9% standalone margin.
Okay. Alone, what? And this is the last question from my end. How much contribution do you see coming in from premium products to your overall top line by the end of this year, the new launches that will happen?
In next 3 quarters, we look at 5% contribution coming from the premium segment.